So before we dive into that topic, I do want to share about GreenPath. We are a nationwide nonprofit organization. So we provide financial education and tools to help empower people to lead financially healthy lives. Webinars are one way that we provide this education, as well as providing free one-on-one financial counseling about a variety of topics. This can include everything from kind of some money basics like your budget and reviewing your credit report. We can also help with any housing concerns you may have, whether you're a renter, a homeowner, or looking to become a homeowner. We definitely talk about debt options, which is what we're going to get into today. And one of the options we'll discuss is a debt management program, which is a possible option that we can look at when we're talking about unsecured debts. And we also provide student loan counseling. So for those that have student loans who are maybe wondering about what their repayment options are, we can help get you pointed in the right direction. So before we wrap up today, I will make sure you have all of our contact information. If you are looking for a more personalized, customized approach to dealing with your debt or any other financial concerns you may have, you can reach out to a GreenPath counselor. So today we're going to talk about what we can do as we're getting started in this process of tackling debt. And then we're going to talk about 5 different options that people can use to address their debt. And we'll go over some of the pros and cons of each of those options so you can think about which may best fit your situation and needs. And then finally, we'll wrap up with some tips to stay on track towards your own financial goals around debt. So let's start out by looking at how we can get prepared to pay off debt. First, getting a clear understanding of your current financial situation can sometimes feel intimidating or maybe even scary, but it's really imperative that you know where you stand so that you can become debt free. So, knowing where you currently are at with your financial situation is going to help you to set clear and realistic goals and evaluate your options a little bit more confidently. So start out by making a list of all of your income. This includes anything that you can count on to come in on a regular basis. So, for example, your paycheck, child support, Social Security, however you receive income monthly, you need to know how much you have to work with each month. Make sure if you're someone that has overtime, you're not including that in your regular income accounting, unless it's something that's really guaranteed to be consistent. And be sure not to include other income that varies significantly or is maybe unreliable. Inconsistent income like overtime and kind of side hustle jobs can be used as extra money to reach your goals quicker, but it's best if we don't consider that as part of your monthly budget unless it's something more guaranteed. Review your checking and savings account balances so that you know where you currently stand. Next, it's really important to understand where your money is currently going. So, review your statements to make a detailed list of all of your monthly bills and payment obligations, as well as anything else that your money goes to on a regular basis. So, that could be food, gas, childcare, entertainment, subscriptions, or any other miscellaneous expenses you may have regularly. Take a look back over the last few months to get an accurate representation of the average amount that you spend in each area over time. Some online banking options can provide a breakdown by category to make this easier for you. So check if that's an option with your financial institution. It's also really important that we make a list of all of the debt that is owed. So know who you owe, exactly how much you owe them, your current interest rates, your current monthly minimum payments, and note if anything is currently past due. I also would strongly encourage you to pull a copy of your credit report from all 3 credit reporting bureaus. Those are TransUnion, Experian, and Equifax. Reviewing your credit report can help ensure that you haven't forgotten anything, or maybe there's something else floating around out there that you didn't even realize existed. It's also a really good habit to get into a cycle of reviewing your credit reports at least once a year. And I always recommend annualcreditreport.com to review your reports for free from one trusted place. Annualcreditreport.com is the site that was established by the federal government where you can get your reports for free. And right now, they actually have weekly free reporting going on. So you can update that even more regularly than on an annual basis. And I put that in the chat so you have that as well. Now, everyone's financial situation is unique, so getting these steps to get prepared are really important because that's going to help you determine which options to pay off debt may or may not work for you. There's no one cut and dry solution that's guaranteed to work best for everyone, and there are pros and cons to every option that we have to weigh individually. I know that getting rid of debt can sometimes feel daunting and maybe even impossible, and it can be hard to know what your options are even available to you. Not to mention having the added pressure of trying to determine which options are legitimate and which may be scams. So, we're going to move into taking a look at some different options that may be realistic to help you get debt free. And I've got a little feedback on the line, so I'm just going to go ahead and mute you real quick. Awesome. All right, so today, as I mentioned, we are going to touch on 5 main options to get you out of debt. Things that you can do on your own, debt consolidation loans through your financial institution, debt settlement, or sometimes called debt relief or debt forgiveness, bankruptcy, and debt management programs. Now, the chances are you may have already been trying to pay off debt on your own, but if you don't have a plan, your success may be limited. If you do have money left over in your budget, a strategy to pay the debt down could be as simple as increasing your monthly payments. If this is you, consider using the debt snowball method, which is a strategy where you pay off debt in order of the smallest to the largest balances, gaining momentum as you go. It's extremely important to make sure you always make the minimum payment for all of your accounts and then put any extra funds you have towards the smallest account balance. Once that small account is paid off, success relies on you consistently redirecting all the money you were paying towards that small account to the next debt until all of the balances are paid in full. The debt snowball method can be really inspiring as you start making progress and you see that snowball growing as debts get paid off. You could also consider the debt avalanche method, which is a strategy of allocating enough money to make the minimum payment on each debt, and then paying any extra money you have to the debt with the highest interest rate. Similar to the snowball, which pays the balances off smallest to largest, the debt avalanche is going to pay off the high interest rate to the lowest. And finally, you could approach each creditor individually to ask if they could offer any internal hardship programs or promotions to help lower interest rates and stop late fees to allow you to pay off the debts faster. Make sure if you go this route that you are keeping track of the conversations you have with the creditors, including when you speak with them, the name of the person that you spoke with, and what was agreed to. Be sure that you review your budget to ensure you're not agreeing to an arrangement that is not going to be realistic for you to follow through on. Now, as I mentioned earlier, every option has unique pros and cons, so we're going to look at that with all of the options we talk about today. So the pros of all 3 of these options that you can do on your own is that there is no financial cost for you to implement them. Also, you typically don't have to apply or be subject to underwriting approval requirements. Now, some creditors may need some information from you to determine if they can offer a hardship program, but it's not as in-depth as applying for a loan would be. And in general, if it's done as intended, these options typically have little or no negative impact to your credit, and they may allow you to keep your accounts open if that's a goal you have. So be sure to ask about this if you are pursuing a hardship option with the creditor, as many creditors will freeze or sometimes close lines of credit when they offer reduced interest rates. Now, there are some challenges to tackling debt on your own, including the need for strict self accountability and follow through, with constant pulls all around to spend your money in other ways or get off track. Something else to consider if you're choosing to reach out for a creditor for a hardship plan is the time commitment it may take to make these calls, as well as your personal level of comfort reaching out and having conversations with your creditors. Additionally, you are at the mercy of the willingness of each creditor to offer an option and if it's an option that will last long term. As I mentioned, creditors may also freeze or completely close an account as part of hardship programs as well. Now, for many of us, we're not in a situation where we have money left over at the end of each month. So, increasing payments may not be in the cards for you if you're barely breaking even or even running short each month. The good news is that there are other options available for you. So, we're going to start with option number two, which is a debt consolidation loan. Debt consolidation can come in many different forms, but the intent is to borrow money and use that money to pay off other debts, and then have one single monthly payment back to the lender instead of sending payments each month to multiple different creditors. Now, a consolidation loan could be an unsecured loan, which means it doesn't require any collateral, like a home or a car, to secure that debt. You could also consider a secured loan, which means something of value, like your home or your car, for instance, is put up as collateral in case you fall behind on the loan. This could take the form of a home equity loan or line of credit, or a title loan in the case of a vehicle. It is imperative that you understand all of the terms and what is at risk if something happens and you fall behind on payments before you sign up for any of these secured loan options. Now, the benefits of debt consolidation loans include knowing what your monthly payment will be and exactly for how long. And the goal of getting a consolidation loan is to typically lock in a lower interest rate, and therefore, ideally, you'll have a lower monthly payment than what your previous minimum payments combined added up to. Now, your accounts may not be closed when you pay off the balances with a consolidation loan, although there is a chance that they may be. So be sure to ask this question if you're exploring this option and it's of concern to you. Now, this may be a con for some people, however, because if you don't stop using those open credit card accounts and you acquire more debt, you may find yourself in the position that many people are who take out a consolidation loan, where they have the debt of the new consolidation loan as well as debt balances building up on their credit cards, which they then have to start making payments to. Now, on the flip side, there's a few things to keep in mind. Since this is a loan, you typically do have to apply and go through an underwriting and approval process. Income, assets, employment history, credit, and the amount of debt compared to your income are typically going to be factors that will be considered by the creditor. A debt consolidation loan could also have a negative impact on your credit due to having a new inquiry and a new account, although this should be small overall. And perhaps the most important consideration to keep in mind, if you are taking a secured loan and you are risking the collateral, such as your home or vehicle, if you can't afford the payments and fall behind, this could really have a very big negative impact on your financial situation. So be sure to exercise caution before using a secured loan to consolidate and pay off unsecured debt, especially if there's any hint of financial uncertainty that could lead to making payments consistently a problem. The interest rates typically do tend to be better on secured loans because there's less risk to the lender, but it's really important that you weigh the risk to yourself simultaneously. So, for example, if you use a home equity loan or a home equity line of credit to consolidate your debt, if something happens, like you lose your job and you can't keep up with that payment, your house could be at risk of foreclosure because the home was used as collateral to secure the loan. Now, next, we're going to talk about debt settlement, which can be known under a few different names. If you're someone that has looked on the internet for debt help, you maybe have seen a debt settlement company's ad. You may also have noticed their ads on TV, maybe late at night, or on billboards or on the radio. So typically, debt settlement is a solution that is usually best used to help someone who is working on cleaning up debt that is already in collections, although sometimes people with open accounts may use it as well. Now, debt settlement is a negotiation between a creditor and a borrower to pay back a portion of the outstanding debt with the remainder of the debt forgiven. So, for example, you could have a $5,000 collection bill, and the creditor could potentially agree to a settlement where you would pay $3,500 and that $1,500 difference would be forgiven. Now, I mentioned debt settlement or debt relief companies, but you can choose to attempt to negotiate a settlement on your own. It is up to your creditor's discretion if they're willing to negotiate and what the settlement offer would be. It's typically much easier if you already have the funds available to negotiate and pay immediately, and if the account is already past due and in collections. People are often most successful negotiating settlements on those collections or charged off accounts. Make sure if you go this route that you obtain any settlement offers in writing and that your creditor agrees to them in writing so that you know how everything will be reported to the credit bureaus. Typically, settled debts are reported as settled in full versus paid in full, which can have some negative impact to your credit. Now, settlement, of course, can save you money if you're able to successfully negotiate a lower balance. If you enter into a payment plan or work with a debt settlement company to pay off the accounts that you're currently paying on, your monthly payment may potentially be lower than your current payments. Bear with me one moment. Just want to mute the line real quick. All right, thanks, folks. Now, again, settlement can be an option to resolve outstanding collection account balances much quicker than paying back the debt in full. And it can be an option to avoid more drastic or last resort options like non-payment or bankruptcy. But it is important to keep several things in mind if you're considering settlement. First and foremost, not all creditors are willing to participate in debt settlement programs or negotiate a settlement directly with you or a debt settlement company working on your behalf. Again, this is really up to the creditor's discretion, and they will typically only do this once accounts are charged off. If you are including accounts that are still open and active in a debt settlement program, those accounts typically fall past due if you're working through a debt settlement company. So typically, a debt settlement company will have you make payments on a monthly basis to them and hold that money in an escrow account until a certain balance is reached. At that point, once those accounts that you've included in the program are past due, they'll attempt to reach out to the creditors and negotiate a settlement. But again, remember, it is up to each individual creditor's discretion if they agree to negotiate or not. Now, in the meantime, while you're on this program, any credit card accounts that you have will fall past due because you're not making the payments on your own and the debt settlement payments. As this happens, the accounts typically close, additional late fees and interest will accumulate, and you'll likely receive numerous collection calls because your creditors are typically left in the dark during this process. It's also going to have a really negative impact on your credit as those late payments start to report. So, if the accounts do fall far enough past due, the creditor may send the account to collection or pursue legal action in an attempt to collect the debt balance owed. So if you are deciding to pursue debt settlement, please pay close attention to any mail you receive and take immediate action on any legal notices or court summons. Typically, these are not things that a debt settlement company can do on your behalf. Now, while upfront negotiation with a settled balance sounds like a good way to save money, working with a settlement company does incur fees for the settlement negotiation, as well as the additional fees and interest that are charged on the past due balances if the creditor does not agree to negotiate the settlement. You potentially could be on the hook for the entire higher balance. Your credit score also will suffer, and this can lead to future credit being more expensive to obtain, as you may only be eligible for higher interest rates or subprime lending options. And finally, if everything does go as planned and a creditor does agree to a negotiated settlement, there can be a tax liability on the portion that was settled. The IRS will typically consider this forgiven debt a form of income. So I do highly recommend that you speak to a tax professional if you're considering settlement so that you have an understanding of any potential tax liability. So, not to discourage you here, there is a time and place that debt settlement can make sense, especially if you are trying to resolve some old collection accounts. But many people are not aware of what they're signing up for when they start with a debt settlement company, and they wish they may have had more information before they enroll their open accounts into a debt settlement program. So the next option we're going to talk about is bankruptcy. And this one I know can be scary for a lot of people, We definitely tend to think about this in a more negative light. But on the surface, really, bankruptcy is a legal process through which people who cannot repay their debts to their creditors can seek relief from some or all of their debts. Now, although you can file bankruptcy on your own without an attorney, we do typically recommend that you get legal advice. Now, as I mentioned, bankruptcy should really be reserved as a last resort option after you've already explored all other options because it can have significant and long-term impact. Now, there are two main types of personal bankruptcy. The first is a Chapter 13, which typically will still require some repayment of the debts on a portion of the creditors through the court. There's also a Chapter 7, which usually allows your debts to be discharged without requiring payments. So, an attorney can help you to understand which type you may be eligible for. Many bankruptcy attorneys will offer a free initial consultation to help you get some clarity on what filing bankruptcy will look like for you personally. Now, again, there are pros and cons to this option. One of the big pros is that filing bankruptcy can potentially stop adverse action, including wage garnishment, repossession, and foreclosure. Absolutely seek legal advice if this is something that you're facing. Bankruptcy can also stop collection calls and provide you from some relief from these collection efforts as well. Now, depending on the terms of the bankruptcy, you may end up paying out significantly less to creditors than you would with other options. So you may save a good amount of money with bankruptcy. Now, there are some upfront expenses involved, especially if you are utilizing a bankruptcy attorney, as well as court fees that must be paid. So be sure to weigh this carefully, especially if you are pursuing a Chapter 13 bankruptcy, as you still have additional fees on top of repaying some of the debt. Now, your income and assets may have an impact on your ability to file a bankruptcy and have debts discharged. So that's something that a bankruptcy attorney can also give you more information on if you have concerns. And not all forms of debt are able to be included or discharged through a bankruptcy. This includes things like student loans, which is often a concern that a lot of people have when they're looking at bankruptcy. And bankruptcy can stay on your credit report for up to 10 years, which can impact your ability to obtain future credit and the cost of obtaining that credit. Now, it's not impossible to rebuild credit after bankruptcy, but it is a bit more of an uphill battle. So again, it's important to weigh, especially in the instance of a Chapter 13 bankruptcy that's still going to require some debt repayment. If there's another option to repay the debt that can avoid the credit impact of bankruptcy, it's definitely worth exploring that further. So the final option that we're going to talk about today is debt management plans or debt management programs. This is probably one of the lesser known options of the five, and it's one that not a lot of people are aware of. So we want to make sure that you have some more information on how that works. So debt management plans are typically for unsecured debt. So things like credit cards, collection accounts, medical bills, and in some cases, payday or finance loans or personal loans. Although these tend to be on a more case by case basis. Now, Neighborhood Credit Union partners with GreenPath, which, as I mentioned, is a nonprofit credit counseling organization, to offer debt management programs to the people that neighborhood serves. Now, through a debt management plan, GreenPath will create a structured repayment plan to pay off the unsecured debt in full and reach out to your creditors in advance to get concessions. So, things like lowered interest rates, waived late fees, and re aging of your account, which means we can help to bring it back current. Now, you would make deposits to GreenPath based on your pay schedule, typically weekly or biweekly or monthly if that works for you. And then GreenPath takes that money each month to pay the creditors until the balances are paid back in full. Now, on the surface, this may sound similar to debt settlement programs because the mechanics of it sound the same. You're making a payment to a third party company to work with your creditors. But it is very different from a debt settlement program because the goal is to not negotiate on the debt balances themselves. It's to simply improve the terms of debt repayment. And the creditors are involved in the process every step of the way. GreenPath sends the creditors a proposal and they agree to accept a certain payment and offer a certain interest rate until the debt is paid in full. And they continue to receive payments from the person each and every month. So they continue to report those on-time payments to the creditors. Now, looking at the pros of a debt management plan, there is no minimum credit score or approval requirements like there would be if you were trying to get a consolidation loan. And another great benefit is that the program is typically structured to pay back the full debt owed within about 3 to 5 years. Debt management plan also offers the benefit of getting money in one place, getting money to you in one place. So you make the payment to GreenPath and then they distribute that to your creditors on your behalf every month. This is much easier for many people than juggling multiple payments with multiple due dates, and it aligns your payments to your pay schedule. And finally, one of the biggest benefits of the debt management plan is that the creditors are able to improve your repayment terms. So every creditor does have different terms that they offer, so it can vary from account to account, but many are able to significantly reduce interest rates. And this leads to lower monthly payments required as there is less money needed to go to the interest each month, and more of that payment goes to the debt, which is what helps get everything paid off in 5 years. Now, as we've discussed with all of the other options, there are some important considerations to weigh and keep in mind, including the fact that on a debt management plan, creditors involved will close the accounts that are included. So having the cards closed may actually be a benefit, however. If your goal is to become debt-free and not get back in debt, not having access to the credit cards could potentially be a good thing for you. Now, when those cards do all close at once, sometimes people will see a small negative impact on their credit. However, if their accounts have already been past due or are getting close to maxed out, more than likely that person has already seen the negative impact to their credit, and really things can only improve from there. As the balances are paid off more aggressively and positive payment history builds up, many people who use a debt management plan to pay off their debt see their score improve and increase over the life of the program, even after that initial negative impact when the program starts. So, if you are considering a debt management plan and you're concerned about the credit impact, GreenPath counselors can absolutely talk with you in more detail about what this might look for your specific credit situation and help you develop a plan to rebuild your credit score as soon as possible. And I also want to clarify that while many creditors, including major credit card companies, officially agree to work on a debt management plan, there are some creditors who may not, but they still typically accept payments and post those towards your balance if you include them in the program. And finally, while having a conversation about the best options for you to tackle your debt, I do want you to be aware that there is typically a small setup and monthly maintenance fee associated with enrolling on a debt management plan. Those fees are regulated by state laws and they vary from state to state, but they're typically based on the amount of debt that's included and they never exceed $75 a month. In Texas, the maximum fee is actually $50 if you are sitting there in Texas. So typically, any fee for the debt management plan is significantly outweighed by the savings obtained through the reduced interest rates. So again, a GreenPath counselor will talk through this with you in detail if you're considering this option to make sure that it's financially beneficial for you. All right, so I know we have gone over a lot of information, but hopefully at least one of these options has captured your attention and feels like it may be realistic for you. Regardless of which option you choose, there are a few tips that are important to stay on track towards your goal of getting rid of your debt. Now, the first of which is developing a budget or spending plan. Now, a budget is really just a plan knowing where your money is going, and it's designed to help you keep track and make sure that your money is going to the places that you want it to be going so that you can reach your financial goals. So, creating and sticking to a budget will be key to your success in paying debt off. It's also really important to track your spending to make sure that you are on top of your budget and your financial goals. There are lots of different ways to do this. You could use the cash envelope system, maybe a notebook and a pencil or pen. You can use spreadsheets, different apps. Your financial institution may have some tools as well. So find a way that is comfortable and works for you, and then commit to yourself to keep a close eye on where every dollar is going, especially as you're working towards this goal of becoming debt free. I also really encourage people who have savings available to fall back on in an emergency before you aggressively tackle debt. I know it can feel counterintuitive to have money sitting in a savings account if you have debt, but you also don't want to put yourself in a situation where you have to take out more debt to cover an emergency expense. So make sure you at least have that, 500 to $1,000 oopsie emergency expense, and really ideally start building towards that 3 to 6 months of emergency savings. Next, look for opportunities to reduce your expenses or bring more money in with the purpose of putting extra funds towards paying off your debt quicker. Remember that cutting out expenses that are considered more of a luxury or picking up extra shifts or a side gig doesn't have to be forever. These can be temporary sacrifices to help you reach your goal quicker. And finally, my biggest tip to stay on track is to know why you're doing this. Set clear goals for yourself and make sure that they're realistic and attainable so that you can stick to them. Having smaller goals and milestones within your large goals can help keep you motivated. So, know what you're working towards and have a plan for how you can realistically get there. And be sure to celebrate your successes every step of the way. This will help keep you motivated on track and make sure you follow through with your plan. So, if you like the information from today and you want to learn more, we do have an online course within our Learning Lab Plus. This is available on our site with Neighborhood Credit Union. I'm going to go ahead and pop that into the chat. It's greenpath.com/neighborhoodcu, and you can click right on the Learning Lab Plus. There is a debt repayments option course, which will go over some of the options we covered today. There are also other courses. So if you need help with making a budget, there's a course on budgeting. If you need help with credit, there's a course on credit. Maybe you wanted to learn about student loan repayment options today, and we didn't cover that. There's a student loan repayment option course. So these are all great courses for you on your own time to kind of learn more. They're all very short and sweet, 5 to 15 minutes for the most part, but you can explore and learn more and share with your family and friends. And if you do want to have that customized, individualized advice, if you're not sure which option is going to make the most sense for you, or maybe you need help with developing that budget, or you just have some further questions, you can reach out to speak with one of our financial wellness experts. The number to reach us at is 877-337-3399. You can also explore more on that website that I gave you, greenpath.com/neighborhoodcu. There's a lot of information about GreenPath services. There's also some great tools on there. There is a budget planning tool, for example, if you need some support with that. There's also a debt management calculator, so you can see some potential savings with a debt management program if you're curious about that before reaching out to a counselor. But I appreciate all of your time today, and we can now take some time for questions. Go ahead and